Hey, how are you, everybody? This is Colin Andrews with Colin Andrews International, as well as co-founder of realestateinvestor.com. And I am super excited right now because the guests that I have, they're probably, for the current situation that the economy is in with what's going on, this might be the most important webinar that you hear the entire year. And the reason why is because it deals with you, it deals with your family, it deals with your financial security, it deals with everything that is happening right now with the world and what's going on with it. The gentleman that I have right now on the line is Mr. Tim Dobronsky, and Tim has been for more than 10 years working with self-directed IRAs, real estate investing, and has a huge amount of marketing experience as well. Actually, for the last 6 years, Tim was a key player at one of the nation's largest self-directed IRA custodians. He's helped thousands and thousands of real estate investors reach their financial goals by creating and investing their retirement plans in non-traditional investments, especially real estate, which, as you know, I've been doing real estate now for over 10 years. I love real estate. I'm a real estate guy from the ground up. And actually, for more than 2 years, Tim has actually also worked with real estate investors to develop and implement their internet, social media, and direct mail marketing campaigns. And so there's a lot of folks that might know the information on IRAs and on securities, on what to do with retirement plans, but very few of them, if any of them, in the entire world have the type of real estate knowledge and experience that Tim does. And so he really dovetails it perfectly together, and that's why out of everyone else that could possibly do a presentation like this, I chose him because of his wealth of knowledge, just not just with self-directed IRAs, but as a real estate entrepreneur as well. Now with his role as Vice President and Senior IRA Asset Strategist for the iPlan Group, Tim manages the team and really helps educate and assist individuals on their investment possibilities with using self-directed IRAs. In addition, he plays a significant role in developing the marketing strategies for his company as well, the iPlan Group. So as a real estate investor himself, Tim believes that it is his mission to help investors take control of their financial future by combining their investment knowledge with the power of a self-directed IRA. And I, as I mentioned, cannot be more excited to have him because with everything that is going on, and just from friends and family members, I have seen people have their 401ks, have their IRAs absolutely decimated by putting all of their eggs in somebody else's basket, by letting them have control of their financial futures instead of really putting their own financial future in their own hands and in the hands of other people who have other non-traditional ideas, as opposed to just putting your money into mutual funds or basic blue chip stocks and other things that normal retirement accounts do. So you didn't come on here to listen to me, you came here to listen to Mr. Tim Dobronsky. So without further ado, Tim, are you with us?
Yeah, I'm right here, Colin. Thanks for having me today.
Absolutely. So take it away, my man. I'm going to actually mute myself, but I'll be able to chime in with anything that I'm either confused about or something that I think is really impactful. So please take it away. I got my pen and paper out. I encourage everyone else to take your pen and paper out, and the floor is yours, my friend.
Thanks a lot, Colin. And yeah, please ask me any questions. You know, when they come, I'm sure a few questions will come up, and I'm sure a lot of the other people on the call will be wondering the same thing. So please chime in anytime.
I will do that.
All right, Colin. Well, great. Well, thanks for that great introduction and those kind words there, Colin. Yeah, I want to talk to everybody today on the call about self-directed IRAs and how you can really take full responsibility and full control over your retirement funds. And so what I want to first talk a little bit about here is how some of the traditional thinkers and traditional ways of investing go as far as retirement goes. And the most common that I see throughout the U.S. here, I deal with clients across the country in all kinds of different scenarios, but the buy, hold, and hope strategy is one of the most common investment strategies when it comes to retirement planning. And as you can see here, what I did is I went to Google Advisor recently and pulled the most recent CD rates. And a lot of people I see put their IRA funds or retirement funds into a CD at a local bank. So you can see here that the highest interest rate that a CD is paying there is the number one there at Connex, or ConnexUs, I guess it is, at 2%, and it's over a 60-month term, so a 5-year term, and the minimum investment is $10,000. So you can see the interest earned would be $1,049, basically over that 5-year period. So, really a 2% return. If you're getting that, you're really working backwards. When it comes to inflation, I mean, if you look at inflation now, we're at least at 3%, but it's probably, if you factor in energy and fuel costs and food costs, it's really probably closer to 5 or 6%. So you're actually losing money every day if this is your strategy as far as the buy, hold, and hope. So I would really hope that most of you are not currently in a CD. If you are, I would highly suggest that you think about moving into some other investment that's going to get you a better return than that. Here's another buy, hold, and hope strategy, and that would be in the stock market, right? Because, most advisors have said over the years, slow and steady wins the race. Well, you can see here, this is a little printout from 2009. It's June 3rd, 2009, and this is back when the Dow Jones, you can see the 52-week low was 6,400 points, and then the 52-week high was 12,600 points. So you can see the huge fluctuation there. I don't have to remind a lot of you, a couple of years ago how, the stock market crashed because a lot of people, unfortunately, lost a lot of money. A lot of the 401ks turned into 201ks. I know it's, not very fun thing to joke about, but I mean, it's a reality. I mean, a lot of people lost a lot of money and are still trying to recover, because if you look at the Dow Jones even today, it's still not back to where we were, back in 07. We're at 13,000, a little over 13,000 points today when I'm doing this webinar here. And, you're still not at 14,000 points, which is where we were at in 2007. So, again, you've lost 5 years of your retirement building and earning income and building that retirement account over those 5 years. So that's time you can't get back. So now you got to get into an investment that's going to, get you a higher return, so you can rebuild that and have the lifestyle that you want when you retire. And then, back here, this is actually what I was just talking about a second ago, is that in 2007, you can see where the Dow Jones Industrial Average was just over 14,000, and today, it's at 13,167. So, again, still not back to even, lost those 5 years. So, you really got to look for outside the box and take control of your retirement. I think that's the best option at this point for many of you. So here's a recent USA Today article, and you can see here that the quote is 73% planning to work past retirement. And unfortunately, this is the case for a lot of folks, including Susan Webb here, who talked about in the article how her and her husband are 63 and 67 years old, and they're both still working full time. She wanted to retire, but because her 401k wasn't where it was at, because they have lost funds in that retirement plan, she couldn't retire, and she's going to have to continue to work. And, I think obviously 73% are planning on doing that, and we're going to show you a way, using and taking control of your funds, using a self-directed IRA where hopefully you can retire when you want to and enjoy your loved ones and traveling and all the things that you really want to do instead of continuing to work. And, in that same article, we've got, Sherry Hubbs here saying she's only 50 and she just feels like she's going to work until the day I die. And again, that I think is really the feeling of most Americans right now. They feel like they're never going to have the chance to retire because of the different things that have happened in the economy recently in the last few years. And it's unfortunate. But we're going to show you that you do have options. And Greg Schmidt here, he knows he's already going to be working into his 70s. He's already, knows that's a reality. But what was interesting in his quote here was he said he's most concerned that they're going to be entering a different time and that equities or, stocks aren't quite as valued, he said. He's afraid he's a little too heavy into equities. And so he goes on to say here that 10% drop in the Dow Jones Industrial Average, which recovered most of those losses by climbing this week, but it's again, you've lost that time. And so it says here that 62% of the baby boomers polled lost money in at least one of the four core parts of their retirement savings. And number one was their retirement savings. And number two was personal investments outside of an IRA or workplace. Number three was an IRA, an individual retirement account. And number four was real estate. But real estate, if you look at that, was actually the lowest number. So, I think real estate is still a very good opportunity for you to invest in and rebuild your retirement. We're going to go over how you might be able to do that, and that's one of the options you can use the self-directed IRA for. So is there a better option? That's the big question, right? And if so, what is the better option? Well, let's talk a little bit about that. A self-directed IRA, these are secrets of the wealthy, and they've been known for years. It's just not very common because financial advisors and stockbrokers, they never had a financial incentive to tell you about self-directed IRAs because that's not how they get paid. They actually lose money when you transfer assets out of their plan. If they're managing assets for you, they actually lose commission on that when you transfer to a self-directed IRA. So they've never had a financial incentive to do that. And then when you go and buy some type of asset like real estate, then they don't get paid on that either. So when you buy a mutual fund, they get a commission on that. So here's a few quick facts for you. There's currently over $5 trillion held by 50 million Americans in retirement accounts and 401k accounts. And only approximately 2% of those are truly self-directed, meaning you can use those funds to invest in non-traditional assets like real estate. And there are IRS rules that you have to follow, but these self-directed IRAs have been around since IRAs were created, which was back in 1974. So they've been around. The IRS has listed a few things of what you can invest in, but everything else is basically an option to invest in with your IRA. So traditional retirement accounts here are typically stocks, bonds, and mutual funds, of course. And what is a self-directed IRA and what is a truly self-directed IRA? A lot of companies out there like Fidelity's and Charles Schwab out there will tell you, you do have a self-directed IRA, but here is a list of mutual funds that you have to choose from. So it is self-directed in a sense because you get to choose your mutual fund, but it doesn't allow you to invest in other asset classes. So it's really not a truly self-directed IRA. And, one of the other benefits that allows, in addition to having control and managing your own retirement fund and your own money, is that you're able to truly diversify into other asset classes. So, it's not a bad thing maybe to have some of the money still in the stock market, but why not, not have all your eggs in one basket and diversify into other asset classes like precious metals, real estate, foreign currency, privately held companies. So there's a number of things we're going to talk about today, but that's something to keep in mind is why wouldn't you truly diversify your portfolio and for your retirement? So what is a truly self-directed IRA? Well, basically, you can invest in almost anything. And I mentioned the three things that you couldn't invest in a minute ago. Here they are. Life insurance policies, sub-S corporations, collectibles like artwork, coins, stamps, antiques, rugs, and even alcoholic beverages are all considered prohibited investments and would be not allowed to be invested in through your individual retirement account or your IRA. So anything else other than that is pretty wide open. So, what other investment options are there? Well, real estate is probably the most popular right now. We have investors investing in single-family homes, first mortgages, and second mortgage, so you can actually buy the mortgage instead of the property. We have investors investing in condos, townhouses, raw land, mixed-use property, commercial property, even mobile homes, multi-unit apartments. You can get creative for some of the creative real estate investors out there. You can do things like lease options, foreclosures, buy, fix, and flip property. You can buy tax liens. You can invest in gold and silver, There's certain types of gold and silver that you can invest in. So that would be like gold and silver eagles and bullion. And you could also invest in privately held companies like LLCs, C corporations, and limited partnerships. So there's a wide range, and this is not all of them, of course. You have many other options, but this is kind of what we see a majority of our self-directed IRA clients investing in. So what is a real estate IRA? Well, we get this question a lot, and basically a real estate IRA is just a self-directed IRA which chooses to invest in real estate. So for example, you can take your IRA and buy a rental property just like the one you see on the screen here. And then also sometimes individuals can provide money from their IRAs to fund other investors' real estate deals. So we call this private lending, and that would be also an option for real estate IRA basically, but in this sense you would be the lender and have a lien on that property, and it would be a secured note basically that you would have. You could secure it with a first or second mortgage on the property, and then the real estate investor would actually pay you, whatever return that you guys had negotiated. So you might be getting.
Tim, if I could, my man, if I could jump in real quick on this.
Sure.
Right now, more than ever before, because banks they've tightened their lending qualifications. They're not giving out money like they used to. That right now there are amazing deals out there all over the country, all over the world right now. But people have the deals, but they're looking for the money. And for people to be able to invest with other seasoned investors, give them the cash that they need to grow their business, there are very few ways that someone can be able to, in my mind, secure their investment by having a note on a property that is a great deal that might be 30, 40, 50% of after repair value, and they're getting money on a solid interest rate, and they're able to get that interest rate secured by real estate. And that is something that people cannot get when they're investing in mutual funds and other types of securities. So I just have to just completely compliment what you're saying on that, as far as right now more than ever the need for smart private lenders, it's needed more than ever before.
Absolutely, Colin. Yeah, I mean, and what we see is we're more than happy to help real estate investors, and you don't have to know everything about a self-directed IRA. If you're talking to a friend or maybe somebody else you're having lunch with, and they have interest in investing in real estate, but maybe they don't have the time to invest, this is a great way for them to kind of partner up with you on a deal. Maybe if you're doing a renovation or rehab property, and you don't have to know everything. You just say, what, call Tim, call iPlan Group. They're more than happy to, we can do a conference call with them, and we're more than happy to educate, folks on how they can use their IRA to lend it out to a real estate investor of their choice and secure it, with a first or second mortgage. And we're seeing, private lenders make anywhere from 7% interest all the way up to, like 20% interest. So it really depends, like I said, what you negotiate between you and your private lender. So yeah, it's a great way to raise capital for your deals. And don't forget, there's over $5 trillion out there. So there's a ton of money out there, folks, sitting on the sidelines. And people are just a little nervous and scared of the stock market. So it's a prime time to tap into those IRA funds. So going on forward here, as far as the real estate IRA process, if you're buying a piece of property in your IRA, this is kind of how the process would work. So you'd have your IRA, your iPlan Group IRA over on the side there, and your IRA would buy this particular property and take title to it. So on the deed, the title would be iPlan Group LLC for the benefit of your IRA, and that's how you would take title. And then all of the income generated, if the IRA owns this property 100%, would be going back into the IRA, and any expenses, including property tax and repairs, would be flowing out of the IRA. So, there's no capital gains tax when that income comes in. It's all tax-deferred money or tax-free because it's inside the IRA and done as an IRA investment. So you don't have to worry about, some people are worried about, well, I have to take a distribution and pay taxes and penalties if I do that. Well, you actually don't, because it's titled in your IRA's name and everything's flowing back, just like if you bought some Apple stock. It's just flowing back into, the profits are flowing back into the IRA without taking a distribution, because it's an investment that the IRA has made. So that's something to keep in mind, and it's really not that complicated of a process. So that's really how simple it can be. So there are a few restrictions when you do invest in real estate, and must be for investment purposes only. So I get this a lot, where somebody wants to live in the property that their IRA is going to buy, or they want a vacation. They want to buy a second home with their IRA and go on vacation there. Well, unfortunately, you couldn't do that with your IRA investment. It's got to be strictly a rental or a buy, fix, and flip opportunity, some type of investment that you're personally not going to benefit from. If you're going to buy a rental inside of your IRA, you can't rent to anybody of direct linear descendants. So you can't rent to your parents, your grandparents, you or your spouse, or any descendants like your children or grandchildren. Those would all be considered disqualified individuals, and you would not be able to rent to them. But you could rent to aunts and uncles, cousins, brothers and sisters. Siblings are okay, nieces, nephews, and anybody else, any other friends that are not of that direct linear descent to you. So it's, there's a few things, rules you have to follow, like I said, but everything else is pretty much wide open. So you may not let disqualified people use or live in the property. So again, you can't vacation there. Your kids can't vacation there. Your parents can't vacation there. But anybody else that's qualified would be allowed to do that. So what is a prohibited transaction? So, neither you or any disqualified individual may benefit from that IRA investment. So again, you can't vacation there, but something else that people want to do a lot would be something like where they own a property already personally. They own a rental property, and they want to just transfer the title to their IRA. Unfortunately, you would not be able to legally do that because you've already personally owned that property. You can't do business with your IRA and just gift it to your IRA to avoid paying taxes. So that would be an example of a prohibited transaction. You cannot buy, sell, or exchange the property between the plan, yourself, or any disqualified people. And you can't provide goods or services or facilities. If for example, if you own a business or something, you can't provide facilities for your IRA, or vice versa. So you would not be able to manage a property, for example, and then receive a property management fee. Or you couldn't flip a property and then pay yourself a general contracting fee. You can't do anything like that. But there's a lot of things that you can do. So that's just a few things as far as prohibited transactions go. And then who is disqualified? Well, here's that list again that we talked about a moment ago. But it's yourself, your spouse, your great-grandparents, your grandparents, your parents, your children and their spouses, grandchildren and great-grandchildren, the employer of a plan, also fiduciaries, so like your beneficiaries would be considered disqualified, and CPAs or your financial advisor would be considered disqualified. And then if you own 50% or more of a corporation or partnership, that partnership or that entity and corporation would be also considered prohibited or disqualified. You wouldn't be able to invest your IRA funds with that particular company. So that's just to give you an idea. Everything else, again, is wide open and allowed. So advantages of investing in a real estate with your IRA, well, capital gains taxes are either tax-free or tax-deferred. You also get the positive cash flow, again, tax-free or tax-deferred from any rental property. There's no time limit for holding the property, so it's different from a 1031 exchange in that there's no time restraints. You don't have to wait, you don't have 180 days to find a property and 45 days to close or anything like that. There's no time limit. You can buy a property for a day and sell it the next day, or you can buy and hold a property for 20 years inside your IRA. It's up to you. There is no time limit. And the IRA can borrow money. So a lot of people aren't aware of this, but We'll get in a little bit more detail on this in a minute, but the IRA can, in fact, borrow money and leverage your investments. So a lot of people do like it because they can, in fact, still leverage their IRA, and, leverage is one of the reasons to invest in real estate. And then the potential to earn a larger rate of return on invested capital, of course, because people are making some great returns now in real estate, just like they were a few years ago. So some of the disadvantages, I always like to go over the disadvantages as well. So there are a few, disadvantages. Everybody wants to know, what's the downside. No tax advantages of owning the real estate. So you basically don't get the tax depreciation and the write-off there if you are owning a property inside of your IRA because it's already in a tax-deferred or tax-free environment. There is no tax deduction for capital losses, and you are solely responsible for gains or losses. Now, some people would see this as a disadvantage. I would see this as an advantage because I want to be responsible for my retirement, my money, and I think I will make better decisions and invest in what I know versus sending it off to some fund manager or advisor that really could care less if my account makes money or loses money. So that's kind of up in the air. So I don't know if that's a disadvantage or advantage. And then you cannot replace losses due to contribution limits. So there's a limit that you can contribute each year. This year, for example, in a traditional or Roth IRA, it's $5,000 if you're under 50, $6,000 if you're 50 or older that you could contribute. But after that, you cannot put any more money in. But keep in mind, that's only contribution, out-of-pocket money. As far as your investments go, there's no limit on how much your investments can earn inside of your IRA. And some people get confused with that, but keep that in mind. Contributions are separate from earnings inside of your IRA. So let's talk about the 3 ways to buy real estate with your IRA. And it's pretty simple, but I'm going to break it down with these 3 different ways to do it. First way is 100% cash from your IRA. That's the example we talked about earlier in that diagram where all expenses and all the income are flowing in and out of the IRA account. The IRA is paying cash, and the IRA owns that property 100%. The second way would be for a partnership opportunity. The IRA could own a piece or a percentage of the property using undivided interest, and the IRA is able to partner with the IRA owner, and these partners can be qualified or disqualified individuals. And I know this might seem a little confusing, but basically if you structure the investment from the beginning where, let's say, you're going to personally own 50% and your IRA is going to also own 50%, and you're going to both put up 50% of the funds for the investment and all the expenses, then 50% of all income can flow back to you and 50% can flow back to your IRA. So this is a great way to use both personal cash and IRA funds to partner on a deal. And then the third way is to leverage. And you, like I mentioned before, your IRA can borrow money. It has to be in the form of a non-recourse loan. And what that means is that it's the only thing used as collateral to secure that property, or is that property, to secure the loan. That's the only thing they're using. You're not personally guaranteeing anything. And we're going to talk about that in a little bit more detail here right now. So your IRA can take on a loan in the form of non-recourse, and upon default, your lender cannot seize seize the subject property only. So that's the only thing. That's what a non-recourse is that they're only going to take back that property if you default. If your IRA defaults on that loan, that's all they get. The non-recourse loan feature is there to protect your IRA and you personally. So you are personally not guaranteeing, and the lender cannot come after any other assets inside of your IRA. So if your IRA has some cash, or if your IRA has other properties, then they cannot come after any of those assets. All they can do is take that subject property only. So it's really there to protect your IRA. Some more about non-recourse loans, and something to keep in mind, it does trigger what's called unrelated business income tax, or UBIT. It's also referred to as unrelated debt financed income. And basically, it creates a tax where the IRA would have to pay a little bit of the profit, to the IRS. But it is a great way to leverage and borrow funds if your IRA doesn't have all the funds for the property purchase. So, we could go over that, and it can be the taxes not a huge problem. I mean, I've seen, some people get scared of paying tax in your IRA, but it is a great way to do maybe a couple deals if you have a smaller IRA to really build your IRA up, so then you can start paying cash for properties. And I've seen, investors even finance, properties 100% and not really worry about this unrelated business income tax. So, but that it's really not a huge worry. So we can talk about that, and also a few lenders to choose from. So there's not a whole lot of lenders out there. If you go to your traditional bank, they're probably not going to let you have a non-recourse loan in your IRA's name. But there are a list that we could get you. There's about 7 or so in the country that we know that are doing non-recourse loans to IRAs. So they are available. And another great way that we had mentioned before would be private lenders to lend money out of their IRA funds or personal cash and give you a non-recourse loan to your IRA. So there are lenders out there doing that. Usually they do require a larger down payment, usually at least 25 to 35% down payment. Sometimes they require as much as 50% down payment, but it's still a way to borrow some of those funds. So the personal guarantee, again, because it's not recourse, personal guarantees by the IRA owner are not required or permitted. So you cannot personally guarantee on that loan. Your IRA can't be used as collateral. So that's the reason you cannot personally guarantee that. You can personally guarantee by a third party, but it must not be a disqualified person. Disqualified persons, again, are anybody of direct linear descent that we talked about before. So there are a few different types of self-directed plans out there, and we offer 7 different plans available to investors, and it really covers everything that you need. So for the traditional Roth IRAs, we offer those. That's the most common. I think, again, the Roth IRA is the way to go. The Roth IRA is by far the best plan out there because it offers tax-free wealth as far as the IRAs go. So I think, paying your taxes on the seed rather than the crop is a huge benefit, and it lets you, build a great retirement plan, not only for yourself, but then also it's a great estate planning tool for your loved ones because you can pass on a tax-free account to them as well. So if you don't already have a Roth IRA, you should definitely look at either converting maybe traditional IRA funds to a Roth to get one started, or look at starting a new one. But definitely get a Roth IRA. The SEP and the simple IRAs, we do offer those as well. Those are for self-employed individuals. And then the qualified plans, those are ERISA controlled. They're typically your 401k plans, 403b plans, 457s, thrift savings plans. They're typically an employer-sponsored plan. And the one thing to keep in mind about those is that if you're still working for an employer, more than likely you're not going to be able to roll over those funds to an IRA or to a self-directed IRA, but it's worth a phone call to check because there are some of the larger companies out there starting to they're called in-service rollovers or distributions happen. So you can check with your current administrator of your 401k plan, but typically you're not going to be able to do that until you stop working there, whether you change jobs or you retire. Then you can at that point immediately roll it to a self-directed IRA. If you're self-employed, one thing I'm going to point out here is you definitely want to look at an individual 401k plan. So this is for anybody self-employed that has no W-2 employees. They're basically just themselves or a family member. So, sometimes it can be a husband and wife team, but they have to be basically a part owner of the company. But an individual 401k allows you, it is the best retirement plan available because it does offer the Roth component. So it does offer a tax-free growth option as far as the Roth component, and it also offers some other huge benefits like contributions up to $50,000 a year. So you can get huge tax deductions as well. You can take out personal loans from this plan. And it also can avoid that unrelated business income tax when using leverage that we talked about a little bit ago. So it's a great plan. Definitely want to look into that if you're self-employed. And then the two other plans I want to mention very quickly here are our Coverdale Educational Savings Account. It's a CESA for short, and it's a college savings plan for children and that are under the age of 18. You can basically put $2,000 in a year, and it grows tax-free just like a Roth. So it's a way to pay for your child's college education tax-free, and it can also be used for private schooling as well before the age of 18. So it's not just college. It can be used for private schooling, uniforms. You can pay for any college education expense, computers, books, room and board. So definitely look at that plan if you have kids or grandkids and then you want to help them out. And then your health savings account. For those of you who haven't looked into this, you need a high deductible insurance plan, but if you have the health savings account like I do, it's a great plan that allows you to get tax deductions going in, and the only plan that allows you to take money out tax-free for any qualified medical expense. So again, an awesome plan. For those of you who are not informed about this one, check it out, or I can email you some information. But the health savings plan is a great plan to lower your premiums on your health insurance and then give you, that tax-free growth and tax-free distributions for qualified medical expenses. All right, so I want to show you basically why the Roth IRA can be so powerful, and here's why. Basically, you use the combination of the compounding interest with a Roth IRA, and you use a calculator like this, and you can quickly see how quickly that account can grow. If you started off with a balance of $100,000 at the age of 40 years old, and you had an expected rate of return of just 10%, which is pretty typical and easy to do right now, especially in real estate, and you retired at the age of 65, so you got 25 years of growth there and no additional contributions annually, you can see that Roth IRA would grow to over $1 million tax-free, and that would be tax-free to you and any of your beneficiaries when you pass away. So an amazing amount of money to be growing and compounding over a 25-year period, and you can see how quickly it can grow when you avoid paying any taxes on that money. So if you look at the next slide here, the difference, what I did here is I wanted to quickly show you how you could double your results. So I took the same dollar amount, started with $100,000 at the age of 40, and I changed two things. I simply changed the expected rate of return to 16% instead of 10, which again, not very tough to do here in this market. I've seen many investors make a lot larger return than 16% on their investments in their self-directed IRA. And then the age of retirement I actually reduced to 60. So now you only have 20 years of growth, and you can see the Roth balance at the end of those 20 years is almost $2 million, folks. And that's tax-free money. So you will never have to pay taxes on that $2 million. So that is huge. And that's a tax savings of almost $1 million versus if you left it in a traditional IRA. So I just wanted to show you how powerful that Roth IRA can be. And then real quick, I want to show you the difference between investing in personal ownership versus an IRA, and as far as a real estate investment goes. In this chart, I used one of my buddies down in Akron, Ohio, who invests in real estate all the time with his IRA, and I wanted to show him the difference on what he was doing in his IRA versus personally, and you can see the net cash generated, the difference. If you do it in the IRA, the first year, just on a rental property, is an additional $433. And then by year 5, you're looking at a $5,000 difference as far as cash generated to your IRA versus you personally by that tax savings. And then here on this chart here, same thing. I'm showing you the IRA versus personal ownership, but the internal rate of return. And you can see personally in year 1, you're making a 16% larger return by just doing it in the self-directed IRA and avoiding the tax that you're paying, any capital gains taxes. And again, if you look at year 5, it's over 17%, almost 18% higher return on your investment. So a huge difference, and definitely a reason why you should be at least using some of your IRA money to invest, in real estate. If you're doing a lot of real estate deals, you should be doing a couple of those inside of your IRA each year. So how is this knowledge going to help you? Well, there's currently, like I mentioned before, over $5 trillion invested in retirement accounts. $5 trillion, folks. So that is the single, largest asset that many Americans have right now is their retirement accounts. And one of the hardest things and the biggest challenges for a lot of people of getting, real estate investors getting transactions done now is financing, of course, because, it's a lot tougher now after the market had crashed a few years ago. So, banks have tightened up, and there's a ton of cash out there, like we talked about, for private lending and to fund your deals. And, right now, as far as real estate investors go, I don't have to tell all the real estate investors out there this, but those of you who are not investing in real estate, now is the best opportunity that we've seen in the last 30 years to invest in real estate. I mean, properties have never cash flowed like this before. I know, there's properties out west, even in California and Phoenix and, in Florida, where things are cash flowing there where you can never do that before. And then, you look at the Midwest here, and I mean, you can get some amazing cash flow on properties here in Ohio and Indianapolis and different markets like that. So, don't let the access to capital hold you back, because the funds are available. Just talk to people about their retirement account. Just mention it to them that they can use their IRA funds to lend out and secure it with a mortgage and get a nice return on their money that they're not getting right now, whether they're in the stock market or in a CD. So just use that to your advantage and do more deals by accessing that capital. Okay, now I want to show you real quick the structure of a self-directed IRA, and I mentioned before that you are a separate entity from your IRA, so you have to keep it that way. You got to keep everything separate and look at it that way. So number one is you, and number two is your IRA or your 401k plan and your retirement plan. And then number three, you see a TPA there, and that's a third-party administrator, and that's what iPlan is. We do all the record keeping and tax reporting for your IRA, and the IRS does require you to have a third-party administrator hold your IRA funds. And then number four is a custodian or trustee, and they hold the final investment paperwork in safekeeping for you. And we have a relationship with a custodian that does that, holds the final deed, for example, to your investment in safekeeping. So nothing happens to that, and when you need that deed, the original deed is available. Okay, and then iPlan's administrator role. What we do as administrator, we guide investors through alternative asset transaction process. So we walk you through the real estate deal or the precious metals investment. We walk you through that step by step. We share status updates each step of the way during the transaction. We also accept your retirement plan contributions and process distributions when you request those out of your account. We review all necessary documents for correct titling to process your investments. So, like, for example, on the real estate deal, we're confirming that you have the correct titling before we send those funds out, and that the deed is going to be titled correctly at closing with the title company. You also will receive, we will take in your investment income and pay any investment expenses when you direct us to pay those. We handle the IRS reporting, like Forms 5498 and 1099, and we provide a ton of free education for our clients and even non-clients and prospects. That we will do webinars just like this. We're doing live workshops at our office and in different places around the country. We're speaking with on stage and doing different seminars, and we're a lot of these real estate investor networking events and RIA groups. So chances are, if you haven't seen us already, you'll see us somewhere. But we provide a lot of free education. So even if you're not here in Ohio, we do a ton of webinars. We usually at least do 2 to 3 webinars a month, and we provide a lot of information in our weekly newsletter as well. So definitely check that out as well if you're not already on our list. What we don't offer, we do not provide any investment advice. We're not licensed advisors, so we can't sell or endorse specific investment products. We don't carry out any form of due diligence or qualifying of an investment. We don't regulate or approve a transaction's legitimacy or investment merit, so we can't tell you, yes, it's a good investment or a bad investment. We just say, yes or no, you could do this in your self-directed IRA, and then we don't evaluate whether it's permissible or prohibited, and we don't manage any assets. So we really want to be part of your team as far as providing the vehicle, the self-directed IRA for you to invest with, but we also want you to have a qualified and a professional attorney, or I should say a tax attorney, a CPA. So it's good to have a CPA and I would say a real estate attorney if you're going to invest in real estate, for example, on your team to help you review transactions, while and before you're doing those investments. Okay, and then why iPlan Group? I mean, that's what everybody's probably wondering. Why, there's other self-directed IRA companies out there. So why should I go with iPlan? Well, we have over 80 years of combined financial services experience. Colin had mentioned before, we have a ton of experience, over 15 years of self-directed IRA experience. So not only myself, but our president has worked in the industry for a number of years, and we have several staff members who have also been in the self-directed IRA investment industry for a number of years. So we're not new to this. And we are also, several of us are real estate investors. So I think that is a huge difference. We really like to say that, we have the self-directed IRAs that are built by investors for investors, because we know what a real estate investment looks like. We do them. We've done them in our IRA. So we know the nuts and bolts of this thing inside and out, and we can help you through that process and make it as easy as possible for you. We charge a flat annual fee of only $485 a year, and actually it can go as low as $225 a year. So $225 to $485 a year is what your annual fee would be, and it's a flat fee. We just simply charge that. We charge a setup fee of $50 for each account that we open, and that's a one-time fee, and that's it. It doesn't matter how large your account grows. We're not going to continue to increase your annual fee like some of the other companies out there do. We're not going to charge you any expedited processing fees to process an investment faster. We feel that it's our job to process your investment as quickly as possible. So most investments go out within a 24 to 48 hour period and without paying any extra fee. We have a relationship team model, which our clients...
And actually, if I could...
Yeah.
Hey, Tim, I just was going to chime in on that real quick.
Yeah.
With some of these deals, as far as the expedited processing fees, there's been several times that I've either have had deals where investors have been investing in a deal that I had, or vice versa. And there's a couple times that, if you got a hot deal and it's not something for a week on it, something that you got to jump on immediately. And so with other companies, we've actually paid those.
I'm losing you a little, Colin. You're breaking up. Colin, you there? Sorry, folks, a little technical difficulties. But, yeah, I mean, I think what Colin was saying, and hopefully you can jump back on here in a second, but yeah, I mean, there is no transaction fee, so, I mean, there's no expedited fee. So, yeah, it does make sense sometimes to have to pay those fees if you're with another company, but the good news is we don't charge those fees. We're going to do it no matter what, and we know, deals can be lost if those are not processed on time. So we do not want to see that happen and see people losing out on deals. We want to build a long-lasting relationship with our clients, so that's why we provide that prompt, accurate, and personalized service. And there's a team that you're assigned to. That's 3 individuals that you're going to work with. Every time that you call in, you're not going to have to explain your situation to 20 different people each day that you call in. You're going to deal with the same team of 3 individuals. It's kind of structured off of a financial advisor model where you talk to either the rep or your account executive or a client relationship manager. So, that is the relationship team which our clients have really loved a lot. So, here's a picture of our office in Westlake, Ohio. That's where we're located. We're about 20 miles west of Cleveland. If you're in the Northeast Ohio area, we would love for you to come by, visit our office. We can introduce you to the team and give you a quick tour. If you're not, we do, like I said, help clients in all 50 states, and, you're more than welcome to give us a call, check us out. But, I mean, you can visit our website and at iplangroup.com, but we would love to, it's not a problem either processing investments, with the technology today as far as email, fax, we can process investments very easily. Let's see if Colin was able to jump back on here. No.
Yeah, I'm back on right now.
Okay, good.
Were you able to hear me? Okay, Tim. Hey, I was really talking about how the expedited service, how that is huge. That with a lot of deals, you got to jump on things quick, and to have to actually pay the extra fees just to be able to have prompt service is ridiculous. So I want to commend you for that. I have paid the extra money for expedited service, so the fact that you just do that as a part of the overall normal standard services, that's great.
Good. Yeah. I mean, we found a lot of clients really enjoy that and, just having the relationship team where they can call in, and talk to the same people. I had mentioned this a little bit ago, but you got booted off. But the relationship team where you call in, you don't have to explain yourself, every time to a new person. It's not a call center that you're calling into. It's a group of 3 people on your team, and you're going to talk to one of those 3 people when you call in. And they're gonna know your situation. They're gonna know your deal, and they're gonna help you process that as quickly and as efficiently as possible.
Exactly, it's great.
So yeah, I just showed this a picture of our office in Westlake, Ohio, and I invite anybody to come by or give us a call. If you're not in Ohio, that's fine. We handle clients in all 50 states, so it's not a problem. And what I also want to do is invite anyone who's interested to set up your free IRA strategy session. Today on the webinar, we're giving this away for free, and we want to set up this strategy session with you to talk about your goals, see what you're looking to accomplish, and see if iPlan Group is a good fit for you or not. So we're not a fit for everyone, but we want to talk to you and see what might make sense. And I bet you most often you'll learn something by talking to one of our strategists on the phone about some new idea you haven't thought of, about how you can use your IRA funds or 401k funds to accomplish something that you want to do and to really build your retirement so you can enjoy the lifestyle with you and your loved ones that you really deserve. And that's what you're trying to, at the end of the day, that's what everybody's trying to accomplish, and we want to be your partner to help you do that. So you can give us a call. Absolutely. There at the number on the screen. You can email us at strategy@iplangroup.com to set up that strategy session, or you can visit us online. You can actually access that strategy session there and schedule that right there on our website at iplangroup.com. So with that, I would love to answer any questions, Colin, that you may have or any attendees might have, and I look forward to working with anybody that's on the call today.
Absolutely. One of the questions, and you might have brought it up and I just missed it, is there a minimum amount needed in order to set up a self-directed IRA?
That is a great question, and I did not include that in the presentation. I did miss that one. There is a minimum. It's only $500 though. So we charge basically a $500, or we require a minimum of $500. If you're starting a brand new IRA or you only have a small amount, we want to see at least $500, as far as the contribution goes. And then you can have an IRA set up. So, $500 contribution is the minimum, and there's no maximum, basically. So,
excellent. Now, what about international deals? Can people use their self-directed IRAs to lend to people who are going to be investing in outside of the U.S.? What's the rules on that?
Yeah, absolutely. We've seen a lot of people over the last few years really start buying a lot more foreign real estate with their IRAs. And, it's definitely possible to either lend to people that are trying to invest overseas or in a different country. And I've seen a lot of people actually use their IRA to buy investment properties, whether it's in Colombia or Costa Rica or Belize. I have a friend who wants to retire in Belize. I mean, there's Panama. There's all kinds of different countries that people are investing in with their IRA. So yeah, there's, each country is a little bit different. So we kind of have to work through, those details. But as long as you get a deed and, a deed to the property in that country, then yeah, it's definitely possible. So, there's a few countries that require like an LLC to be set up sometimes, but that's pretty easy to do too, and we can help you through that. But absolutely, I mean, foreign real estate is a great opportunity. And here's an idea too. I didn't mention this is a little trick for some of the folks that might be thinking, hey, I'd like to retire, like Colin down in Colombia, right? So here's something you could do. Let's say if you have a Roth IRA and you went, and let's say you're 50 years old. You take that Roth IRA, let's say it's $100,000, and you buy let's say nice little condo. I'm sure $100,000 could buy a pretty nice place in Columbia right now, couldn't it, Colin? Colin, you there? Well,
absolutely it can. Oh. Yeah. There's all types of deals all over here.
Okay, so I mean, so basically you take that $100,000 and you buy it with your Roth IRA, and then over the next 10 years, because you're 50 years old, you would rent that property out and get income, rental income from that place that you bought in Columbia, and it would be tax-free income because it would be going back into your Roth IRA tax-free. And then once you reach 59 and a half years of age, which is the age requirement you have to be to take out a qualified distribution from your Roth IRA tax-free, you could actually take a tax-free distribution of that property, of that place in Columbia, and deed it to yourself personally, and then you could go down and retire and live in that property in Columbia. So that is a great way. Yeah, it's a great way to, get all that appreciation over the next 10 years tax-free into your IRA, plus 10 years of rental income. So it's a great plan if there's a place that you have in mind that you want to retire to. A lot of people do want to get out of the U.S. and retire in paradise, down in South America. So it's a great plan.
Absolutely great. Wonderful. Well, hey, Tim, I want to just again say thank you very much for explaining all this. I have been doing real estate for over 10 years now, and it's amazing that every single time that I jump on a webinar, I learn something new, and I can frankly say that I learned a lot that I I wasn't 100% sure on, or I thought that was the idea. I thought that was what was the truth behind it, but I wasn't 100% sure, and so you really solidified a lot of things that I thought I knew, but wasn't 100% confident on, and a couple things that I had just no idea about. So, it's really all about freedom and also independence. And independence, when I think of it, is when it comes to financial security, having that independence to choose where and what your investments do. So it's great. I want to thank you. You're doing a wonderful service. The idea that you really give the personalized attention and you avoid all the extra little fees for quick service, when you're saying that quick service should just be the norm. It shouldn't be something that you spend extra money for. So I just really commend you on that, and I want everyone who is listening to this that if you have IRAs, your self-directed IRA set up with somebody else, or you don't have a self-directed IRA set up, either way, either route which you are, if you already do have your self-directed IRA set up, I want to congratulate you for taking this step. But I would really encourage you to give Tim a call, give them some time for you to really, express what's on your mind and what's on what your concerns are, what your hopes and dreams are, and talk to somebody as opposed to a $12 an hour paper shuffler, which is what you're going to get at some of these big 300, 400, 500 person firms. So I really like the boutique, high standard level of service that you're offering to folks, and out of all the folks that are doing self-directed IRAs, I really like what you have done, and matching your experience with having been working with some of the larger companies and seeing some of the good things that they do, but now offering a more focused, a more boutique, high-level service relationship with your clients. I mean, that's it. That's a knockout blow. So, Tim, you're on to something. Thank you very much. And for everyone, again, give them a call at 855-604-7526, or send them an email at strategy@iplangroup.com. And we hope that you get all of your questions answered, and you truly can sleep even better than you do at night, knowing that you have your funds in your control and not in somebody else's. So thank you very much, Tim. Is there any last things that you'd like to share before we call it a day?
No, I think you pretty much hit it right the nail on the head there. I mean, it's all about freedom and control, really, and taking control of your retirement. So, I mean, that's the bottom line at the end of the day. So you can, be in control and you can enjoy that retirement that you're dreaming of and that you really are working towards building very hard instead of letting somebody else be in control of that and relying on that person. So take responsibility, take control, and give us a call, and we'll set up that strategy session right away.
Absolutely. Awesome. Tim, thank you very much. Have a wonderful rest of your day, and we'll be in touch, my friend.
All right. Thanks a lot, Colin, for having me. Hopefully we can do it again soon sometime.
Absolutely. And for everyone that's listening, thank you very much for really taking your life, your family, your financial future seriously by listening to experts like Tim. He knows what he's doing. He has the background. He has the experience. And he's now offering it to all of his clients on a very focused, a very high-level, high-touch type of way. So thank you for that, for everyone listening, and we'll talk to you soon. Have a great day. We'll be in touch.
All right. Thanks, everyone. Bye, Colin.